Hey there everyone, it's Michael Beresford from Open Court back again for today's Property Wealth WOD. Today I'm going to be talking about an article, I'm going to be mentioning an article that saw in the paper in the last week, and just a really good time to, I guess, refocus and reset about what's really important to be a successful property investor. Okay, I've had an alarming number of discussions or questions asked from clients, family, friends, and so on about selling property, trying to make money quickly, so on and so forth. And I have no doubt that a lot of that is in response to the increased amount of talk in the media and articles like this one around what's happening in the economy, which is natural when we hit an election year, especially when we're only a few months out. Okay, so this article talks about capital inflow to reach $1 trillion for property. Volatile share markets and low interest rates have forced cash to be redirected to bricks and mortar amid forecasts that as much as $1 trillion may flow through the property sector in the coming year. This would be a 6% increase on last year, according to the CBRE Global Investor Intentions Survey for 2016. It goes on to talk about how the survey was done between January and early February, capturing negative sentiment from the volatility in China's share market, and then asked their clients basically for what amount of money they thought they were going to put towards property. Now, that's all well and good. It then goes on to plug a particular development, so maybe the developer was behind that article, who knows. But the bottom line is, guys, there are 4 key things that I want to refocus and recenter on, just to get everyone back on an even keel and thinking the right way about their investments and their investment strategy. Okay. First and foremost, number 1, white noise. You hear us talk about this. This is all the clutter from well-meaning Uncle Bob at the family barbecue on the weekend that thinks that property is a bad idea, when, with all due respect to Uncle Bob, he's got nothing but an opinion. It's all the information in the media, it's what you hear in the newspapers, on the news, and so forth. From those of you that have been talking to us for a while and watching our WODs for a while, you know that we talk about white noise, and it's really just all that distraction that's designed to generate heightened emotion and lowered emotion, high expectations, fear, and take you on that consistent journey. Okay, articles like this are like that. So remember, property is a long-term thing. Stay focused and understand that we're not in this to make money in the next few days or the next week or so. Okay. Secondly, shares and property. So this article talked about specifically the volatility in China and how that might mean that a lot of money and a positive impact was going to happen in the property market in Australia. It's really important to recognise this. So yes, share markets can be volatile. There will be periods when there's enormous growth and people make money, and there will be periods when the share market corrects, like it has done more recently. And in our opinion, my opinion personally, I actually think they're both great times to be in property. When the share market's not going so good, people, like in this article, put money into property, which is good. When the share markets are moving, however, and understanding that a lot of people have money in superannuation funds that are in shares, then that increases everyone's overall net wealth. And when people are making money, they're more confident, and when they're more confident, they spend money, specifically on things like houses and cars and discretionary spending. Okay, so when people are prepared to spend more on their houses, then that has a positive impact on property as well. So while property doesn't have the volatility of the share market being up and the share market being down can both be good opportunities for property investors. Thirdly, skilled migration. So it's really easy to get caught up in the day-to-day things around the election, what's happening with super, interest rates, negative gearing. I'm so confused I can't even think of all the things that I hear on a daily basis. Okay, when the election's going to be, etc., etc., etc. It's really easy to get distracted and lose focus from that. In essence though, we've got an aging population. Okay, there was a big baby boom back in the 60s, early 70s. Those people are now transitioning to retirement. To the point now, and we'll do another WOD and actually have the diagram for you to show you this, but what this graph shows is that the number of taxpayers relative to the number of dependents, so children and pensioners. Taxpayers is decreasing and dependents is increasing. So the whole point being, we need taxpayers to be filling government coffers with money to pay pensions and benefits. Okay, have a look at your tax return and you can see a really large chunk of that goes to pension and benefits, another large chunk goes to health. So that's really where the highest proportions of government spend are happening. Okay, so in essence, we need to be recruiting and importing people and labour to not only grow the economy, but to increase the number of taxpayers. So skilled migration is basically two words to represent ongoing supply and demand, and a heightened demand for residential property, short, medium and long term. Okay. Finally guys, this is a really, really key one. Rome wasn't built in a day. Okay, this is not get rich quick. As Cam says, get rich quick equals lose money fast. So you need to be patient, okay? So see through the white noise, understand that there will be volatility in the share market. Either way, it will have a positive effect on property long term, okay? There's always going to be an underlying demand for housing, and regardless of what's happening in the media or what's happening in the economy, we're taking a long-term view to this, and while you always have your periods of plateau and your periods of growth, over the long term, property will work as an investment. So some good news in terms of immediate capital coming to Australia in the property market. Take that with a grain of salt, guys. Look long term and stay focused. See you next time.